JP Morgan Chase is sitting on $1.4 trillion of just cash on hand in case the banks start failing. Bank of America is holding on to almost $900 billion for the same exact reason. Of the 56 problem banks that are in this country, their total assets are not even worth $100 billion. And if those banks do start failing and create a domino effect for the other small banks, then JP Morgan and all the other big banks go on a cheap shopping spree. So if banks do start failing, we most likely won't see a collapse of the financial system, we'll just see a bunch of mergers take place. Now here's something that should really surprise you about our banking system. New York Community Bank Corp, also known as NYCB, was supposed to have folded already because of all the negative reports they've been releasing and all the money they have lost their investors. Yet they're still floating. Over the past couple days, 5 community banks have had their credit downgraded. These are the ones. While NYCB was tanking like the Titanic, they of course lost a lot of their credit ratings, yet instead of their value dropping down to below $1, it's actually staying above 3. Why is it still alive? This bank was all over the media for months about how poorly it was doing and how it was completely screwed because of the collapse of the commercial real estate sector, mainly with offices. It's almost like everything was priced in. When all the bad press was coming out, lawsuits were being launched left and right against this bank, and then when it looked like the inevitable was happening and that they were going to fold, out comes Steve Mnuchin, the former Secretary of the Treasury, with $1 billion and bails the company out. But before that bailout, people were panicking and predicting some massive run of the banks again. Social media and regular media helped fan those fears of a run, and guess who would have profited from a massive run on the banks? JP Morgan and Company, with trillions of dollars of cash to buy these banks for pennies on the dollar, because more than anything, they want the monopoly. And right now, these big banks getting bigger sounds terrible. I don't like it at all. But if the banking system starts collapsing and these giant banks start saying, don't worry, we are going to buy your bank that collapsed and all of your deposits are safe, you would be more than happy with that. As long as your cash is FDIC insured, you're fine up to $250,000. But if you own stocks in these banks, you're done. That's who gets killed. Do you know how Silicon Valley Bank failed? They were holding on to over $90 billion in US treasuries for safety because that was considered to be the most risk-free asset. Whenever the Federal Reserve raises interest rates, the value of those treasuries goes down. So when those interest rates skyrocketed, the treasury values plummeted. What most people don't know is that Silicon Valley Bank could have actually handled this problem in 1 or 2 days. The only reason why this bank collapsed as quickly as it did is because of a chat group that was spreading fear and paranoia. Once that fear and paranoia hit social media, by the next couple days, Silicon Valley Bank had to close. Signature Bank collapsed along with Silicon Valley, and guess who bought them out? I don't know what's going to happen with NYCB, if it's going to come back up or if it's going to crash to zero. I just know that this was supposed to be the straw that broke the camel's back for months. Now that camel's walking around fine. I'm the Geo Husar, and when the mainstream media is telling you to look left, usually the people with money are going right. Thanks for watching.